hope you're ready to see some magic happen. We're going to be talking about velocity banking, how to get out of debt, increase cash flow, lower expenses, raise our credit score, all using our own income to help us get to the next level in life, right? Be free from the money so it doesn't master us, and then that we can go ahead and live out our dreams, fulfill our passions, our wants, our desires, goals, and what have you, right? So here, diving right into it, all right? Not gonna waste no time. Here we have an example. Income, individual makes $2,500 a month. Their expenses are $2,000. Their debt is $10K. Most people have way more debt than this, but this is just me focusing on one specific debt to kill, to increase my cash flow, to increase their credit score, lower the expenses that they have monthly, and ultimately get them to that next level, all right? It all starts with education, discipline, making a decision, right? So debt's $10K, they're cash flowing about $500 a month, which is about $6K a year, right, give or take. And this specific $10,000 debt is a personal loan. The interest is 9.99%. Monthly payment is right there, $212.42. It's a 5-year pay, right? Every time they make a monthly payment, about $70 to $90 goes towards interest, right? Front loaded, this is an amortized loan. Their total payback that they'll pay back, if they did nothing but just pay the minimum payment for 5 years, they would have paid $12,745.20, okay? The bank made 25% on you. Not bad for the bank, but unfortunately for you, you know, you got taken for a ride, okay, or for these 5 years, all right? They made quite a bit of money on you, pretty much risk-free, because you're diligent at paying your monthly payment, right? Okay. Here's what velocity banking says to do, is to go ahead and get you a line of credit, a personal line of credit, or even business line of credit if you're a business owner, whatever the case, all right? And this is a simple example, right? Break it down easy, okay? A simple line of credit for $5,000. Pretty much anyone can get approved for that if you have like above a 620 credit score, right? Really anyone can get approved. Your interest rate might be higher, doesn't really matter. It's a line of credit, okay? For $5,000, monthly payment 108. We don't care about the 5-year payback or the interest that we're getting charged because it's nothing compared to this. So what velocity banking is saying is take this $5,000 that you got from the bank, take it out and make a chunk payment on the 10K. Okay, now you can be conservative and do like take out 1,000 but I like to be a little more aggressive with it because it's gonna pay off. All right, where you take out the whole five, and make a chunk payment towards the 10K. It's gonna satisfy that month's payment, possibly even the next on this one. Okay. It's gonna lower the balance and it's gonna lower the interest owed overall on the account, because remember, it's a loan, so it's amortized. Interest is calculated of the entirety of the loan. All right. But get this, you've just created 2 debts. Now, is this good or what? Like, what am I getting myself into right now? Okay, I got $10,000 that I owe over here, and you're telling me to go get another $5,000 loan to now owe another $5,000? No. Something's not gonna work out here. Okay, hear me out. since I made that chunk payment, right, what am I going to do with this money that I make per month? All right, so for this individual, they're bringing in $2,500 a month before they make any payment out of their checking account, right? So this is how they're living their life currently. They get a paycheck, they pay bills, they have money left over. They get a paycheck, they pay bills, they have money left over. Maybe they save to spend it later, they invest in a stock or REIT or whatever, they lock their money up, they don't see it. Meanwhile, they're paying all this interest right here. Okay? It was 9.99, but you actually paid 25 over the lifespan of the loan. So you do the math if you're trying to earn 6 to 12 on stocks or whatever you got pitched from someone, right? So before we not get off topic here, $2,500 is this individual's income for this example. Before they pay their bills, I'm simply telling them, go ahead and put all your money, all of it, back into this line of credit. Okay, what happens is with lines of credit, it's really, really cool. The due date will get pushed out much further. All right, satisfies that month's payment plus the next like 3 to 4. Okay, what's also unique is that your monthly payment would actually lower, doesn't stay the same, unlike loans. With lines of credit, as you pay the debt down, so does the monthly payment. The monthly payment goes down, right? So if the monthly payment is going down, guess what else is going down? The interest. See, it looks like you're paying more interest over here than over here. That's 9.99, that's 10.99. Who pays more? Naturally, you're thinking this guy. But that's not the case with personal lines of credit. The interest is calculated daily. So if I'm taking out $5,000, boom, and I made a chunk payment on this debt for 10, lowered my balance, lowered the interest, lowered the overall interest owed on the loan, and then I take $2,500, stuff it right back into the line of credit before the month's over. You know, whether it was like, you know, I get paid $1,250, you know, every 2 weeks, or I get paid every week, whatever it is. Dump the whole paycheck into the line of credit. But wait, I have expenses of $2,000, right? Yeah, all right. So you put $2,500 in, and you paid very, very little on interest. You're gonna go ahead and withdraw $2,000, but you're not gonna withdraw it all at once, right? You may have a $400 car payment due on the 7th, right? Your phone bill is due on the 15th, right? You have a insurance is due on the 21st, right? You have different bills that are due throughout the month. So when you go to pay these bills, instead of paying them out of your checking account, you're just going to withdraw out of the line of credit, since all your money is in here now, right? Even savings, everything, just dump it, boom, in here. And every other day that I have a bill due, I'm just going to withdraw from here. So I'm withdrawing 2 times now, right? I withdrew 5 to pay my personal loan. Then I made a direct deposit into my line of credit. I made a chunk payment using my own income to lower the balance and lower the interest on this debt. In the process, I saved money. Okay, so that $2,745, guess what? That's cash flow coming back to you, right? Now the key thing is I have expenses. So as I'm putting money into the line of credit, I'm also taking money out to pay my expenses. Now, what's going to happen every 2 to 4 weeks, or every week, or every 2 weeks? I'm getting another paycheck, right? Every paycheck I get gets dumped right into the line of credit. What remains is my cash flow of 500 bucks. So 5, 1,000, 15, 2, 25, 3, 35, 4, 45, 5,000. How many months is that? I think that's 10. 5 times 10, yeah, 5,000. So it would take 10 months to pay back $5,000 rather than 5 years, right? Using my own income. Meanwhile, you made an original chunk payment at this debt for 5, lowered the balance to around 5,000, probably a little bit more, probably like 5,200 or 5,400 or something like that, because interest. So meanwhile, you still have to pay the monthly payment each and every month of $212, right? Because that doesn't change, right, with loans. But that's okay, because you're pulling out of here each month, right? You only made one chunk payment for the year, and you're gonna wait 10 to 12 months before you get that number back up to 5 again, where it's like you don't even need to use it, because now that's back to 5. As soon as it gets back up to 5, bam, make another chunk payment, the remaining balance, because it's probably going to be, after 10 to 12 months of paying $212.42 plus the 5, you'll probably have a balance of maybe like 4,000, okay? And then all you do, you make a chunk payment again, and guess what? In less than 2 years, you would have killed this 10K. Your credit score is going to go up, right? Because you have less utilization, right? You paid off a debt extremely fast. Your cash flow is going to go up $212.42. You would have saved, right, that $2,745, probably would have saved about $2,000 in interest. Probably like $1,500 to $2,000 in savings. Okay, that's cash flow plus the $212. So my cash flow is now up $712.42 a month. I still have that debt. So if we're in the second round of chunking, okay, we're in the second round. I owed $4,500 after 10 to 12 months on the loan. So I took out, 45, made a chunk payment, boom, canceled that out. Now I just have this debt of $4,500, let's just say. My minimum payment is going to be somewhere around here or less. It definitely will be less because it's not 5, it's 45. I then made a chunk payment of $2,500 each and every month. And I'm only withdrawing out of the entire month, right? What's 2,000 minus 212, right? Let's just go with, it's like right under $1,800. So now my expenses are down. Let's just say it's at $1,800, my expenses. So if I'm pulling less money out of the line of credit, I'm also paying less money on interest. I make chunk payments using my own income to kill this debt now of the 45. And you do the math. 7, 14, 21, 28, 35, 42, 6, 7, maybe 8 months it'll take you to kill $4,500 using your own income. Whoa. Okay, we're on to something now. Think about that. Look, now you killed that monthly payment. Wouldn't that increase your cash flow? Now you're at 8 something in cash flow a month. And then you tackle the next debt. Maybe you got a car you gotta kill. Or maybe you have student loans. That could be the next thing that you start. And here's what you now have the ability to do. You killed $10,000 of a personal loan. What could you do with this line of credit? With this credit union? Call them up. Hey, yo, I need more credit line. Okay? Increase me to 10, to 15. Boom. They'll approve it. You're gonna see, oh shit, this guy, paying his stuff really, really fast. She must be making a lot of money. Let's increase their line of credit, right? Because they want to make money off of you too, right? All you're doing is lowering the amount that they make, right? You're chunking at debt that's taking from your income, which is delaying you from starting that business, from fulfilling your dreams and passions and goals and wants and desires, right? So we get that going. What's the next thing, right? You can tackle a student loan. You can tackle, a car payment, something that's big, right? And you just keep doing. You want to stick with the lines of credit, right? You really want to make sure you get a line of credit, because the interest is calculated a lot differently than personal loans are, student loans, mortgages, cars, right? So I hope that brings a lot of value to you. All right, hope you can apply this, at least get the concept, right? Have any questions at all, reach out to me. I'm here, I'm available. Man, I want to help people. I want to get this out there. And this is important. Understanding how to use your own income to achieve the 4 numbers that are in your household: income, expenses, debt, and cash flow. You want to get these numbers right. All right? You want to leverage debt to your advantage to kill bad debt. And then you have all this good debt going on. And you can use debt to make money. That's higher level type stuff. That's in real estate, in business, whatever. All right? But the first step that we want to do is we want to accomplish this. We want to get this right. All right? Important. Get that. All right? Enjoy it. Have a good day. Thank you.